Thanks everyone for joining. Great panel, great assets under management we've got here. Are we in the perfect storm for precious metals at the moment? And how do we see the market, the macro factors playing out for the precious metals sector at the moment? Matt, why don't you start us off?
Thanks, Adam, and fellow panelists. Looking forward to this. So in the immediate term, I'd say no, not the precious or not the perfect storm. I think, as Brian mentioned, we're likely to see 1 to 6 months of broad rally across the commodity spectrum, including the base, including the energy metals, particularly the ag minerals. That said, I think it's important to note that this inflation that we're seeing, especially in the past few weeks, is going to be incredibly damaging to the global economy. Of course, we've seen inflation now for a good year and a half or two. It served as a headwind, but that's largely been demand-driven inflation, which is the lesser of two evils as far as inflation goes, driven by very friendly interest rates and massive fiscal stimulus across the world. Once the Ukraine-Russia conflict started, we shifted into supply shock driven inflation, and that acts as a tax on the global economy. So I think just due to the magnitude of the supply disruptions we've seen, we're not going to see the global economy turn off overnight. That said, at some point, these rising prices across the board are going to lead to demand destruction. I think at that point, that's when we'll start to see precious metals really start to shine relative to the rest of the commodity complex.
Yep, and you think it's that uncertainty that's going to draw the precious metals prices higher later on, as you mentioned?
I think so, yeah, and concerns about economic growth and falling asset prices really across most other asset classes.
Peter, what's your view?
Yeah, I don't disagree much with what Matt has to say. I mean, I simplistically look at kind of a lot of what Brian was talking about is that, real interest rates are negative, and I think they're going to stay negative for the foreseeable future. I don't think the Fed's going to be able to raise rates at a fast enough pace to offset inflation. And so, I also agree that I don't believe that the Fed will be able to raise rates as often and as quickly as much as they think they can. So I'm fairly comfortable. On the dollar, I believe that the dollar is in a sort of a potentially bear market sort of downdraft. I don't think the dollar, I think in the environment we're in with the Ukraine and all that, it's a flight to quality, and there will always be that sort of element that props up the dollar, but I believe the dollar is going to be weaker as people are looking at other currencies globally to finance their needs. So.
Kevin, please, yeah.
Is it perfect storm for precious metals from a macro standpoint? I think it is. I really do. You saw Brian had some phenomenal charts there. It's for us. It's a fundamental. It's a macro reason why we believe it's a perfect storm. I think that comparison to 2015 for junior mining stocks, especially, is apt because you had that first Fed rate hike back then, and boom, the precious metal stocks took off. 150% returns on the junior mining stocks. I mean, that was something to behold, and I think we're setting up for that kind of environment again. We look at 1973, 74 is probably one of the best comparisons to what we're facing right now in terms of the raw supply shortages and the commodities that have already been leading the pack, the energy commodities, the fertilizer, the base metals. The precious metals are lagging for sure, as you indicated, but it's the next cab on the rank. And as we have a real inflation problem today, and I think the average investor is just finally starting to wake up to this. But we have a big move ahead, I think.
Miranda.
Yeah, I actually think we are in an environment for a perfect storm. I mean, certainly from my perspective, the years on the banking side with looking at juniors that were not getting any love, and now we're moving into an environment where I think there's so many opportunities out there. And your discussion about inflation and your charts this morning, Brian, talking about this opportunity. And certainly, I mean, from OSEAM's perspective, we focus on precious metals, and we're trying to look for those opportunities where we can step in early and move quickly. Certainly, we're bullish on the price of gold. We're now starting to look at copper. And to your point about copper as a strategic metal and the opportunities at hand that we're looking at now, where we can get in early, we can mobilize. I think we are. I think we're poised for a huge opportunity here.
Brian, I know you've just presented largely on most of this commentary already. Maybe I could throw something different to you. The Fed's running out of options. We were sort of discussing that at the end. What do you think of the digital currency sphere and this idea of China moving to like a digital yuan? Do you think the Fed has that capacity in it? Is that an option that might be something that it can implement, or maybe it's way beyond?
So would the Fed have an option to back the U.S. dollar by
some sort of cryptographic or digital?
Yeah, I think it will have to do that at some point. I think what happens is it's not just the dollar, it's currencies in general. We're in the end game, however long it will last, of this cycle, and currencies will lose their credibility. And at some point there'll be that, air quotes, great reset happening of whatever that looks like. But it won't just be the dollar. I think any currency that wants to establish some credibility, you can do it almost instantly by connecting back to gold or some basket of commodities, et cetera. Gold just happens to be the perfect commodity to do that with. And it would instantly solve a lot of problems. But the dollar will remain the world's reserve currency. I don't think the ruble is going to, I don't think the yuan is going to replace it. I don't think the dollar has any real credible competitors right now to be in the world's reserve currency because of the simple fact of rule of law and aircraft carriers. So combined, that I think is the dollar, its credibility, its status as the world's reserve currency, because while there's a lot to criticize the U.S. about rule of law, you can't say that the dollar, its value, at least its value, isn't dependent on which side of the bed that Xi or Putin woke up on that day. So it's all a relative game. And in that relative game, I think the dollar still reigns supreme.
Excellent. Okay, great. Well, we've done a lot on the macro and we've framed it. Let's delve into the mining sphere now. Matt, maybe you could opine on how are the gold, precious metals mining companies looking at the moment from your perspective? Is now the opportune time? You've obviously been invested for a while, but how are you playing this point in the cycle, and what kind of companies are you looking at?
Well, I know we all have different investment processes up here. I definitely focus much further upstream. In terms of the MJG fund, our median market cap's around 60 million Canadian at the moment. We only have one producing miner in our entire portfolio, and that's a non-precious metal name that's about to be taken out, actually. So that's going to go down to zero. In terms of cash flowing names within the portfolio, very much a royalty buff. About 30% of our weighting is towards junior royalty names, all sub $1 billion, except for Altius Minerals, actually, that just crossed that threshold. And then, in terms of going further downstream, very much like the high quality development plays. I've never been a big optionality guy, where you're buying, cheap ounces in the ground in the hopes that we see $3,000, $4,000, $5,000 gold. I hope we do. Obviously, those optionality plays will supply more leverage than some of those higher quality development plays. Even it's a bit perverse, but that is the way it works. But for me, my game is not predicting metal prices. I think that's an extremely difficult thing to do. I'd rather focus on the high quality names that, even assuming a flat gold price here for 2, 3, 4 years, which is probably not going to happen, but could. In that case, I want names that are able to create value and also potentially be targets of M&A. And going a bit even further upstream, probably the only one on the stage right now interested in the prospect generation space. Totally out of style, that business model is, but there's some advantages to that. And I think the bar is very low for the 30 or 40 odd companies globally that are employing this business model. And a couple of them are trading, at liquidation value. So I think there's some really nice deep value opportunities amongst the PGs. And in terms of our portfolio, we're close to 20% weighted to them at the moment.
Interesting. Why is the project generator model quite outdated?
I mean, I would say there hasn't been a proper discovery bull market probably since the 90s. If you go back to the 2001 through 2007 or 2011, however you want to quantify it, Chinese-driven commodity cycle. A lot of the projects that we saw activity at were formally discovered projects with money already put into the ground. There wasn't a substantial amount of grassroots exploration. We also saw the majors growing through acquisition and much less so through the drill bit. I think that's going to change very much in this upcoming decade. Just follow the lead of Mark Bristow. I'm definitely on his side of the equation. Ian Telfers was out there recently saying that it's all about acquisition. I think these bigger guys are more well suited to partner or acquire much earlier stage companies. And that's why I think we're starting to see M&A activity for companies even pre-resource. Of course, Great Bear's acquisition by Kinross is a good recent example of that.
Peter, can you talk us a little bit through your investment strategy, and then also how do you see the various tiers of the precious metals miners at the moment? I know you tend to like maybe more producing or sort of development stage assets. Do you think there's some consolidation needed in the juniors?
Yeah, so I took over the ASA Gold and Precious Metals Fund about 3 years ago and inherited a portfolio that was kind of top heavy with royalty companies and large cap producers. And over that time frame, I've kind of shifted away from that. And the way I look at it is the investors are looking for people that are investing in the fund are already interested in gold. So I'm assuming that gold, and I am not a gold bug, but I'm I'm positive on the price of gold. So what I felt is, move down in market cap, companies with catalysts. I'm not relying on the price of gold for performance in the fund. I'm looking for catalyst-driven stocks along different sections of the curve, and in that period, hopefully they will be able to outperform. So a lot of I've moved to about 35% into the exploration names, about 35% in the development stage companies, and then the remainder in mainly small and mid cap producers. And so I think that a lot of the companies, the larger companies, have looked away from proper greenfield exploration, and so they're relying on a lot of the smaller companies to perform that exploration prior to and de-risk a project before they can before the larger companies will come in and validate that. And so the way I look at it is, we fund a lot of those companies. We act as partners for the companies and help support them along their journey to becoming either producers or acquired by the larger companies in an effort to build their portfolio. Because I do believe that the large cap companies have a portfolio problem, that their reserve base is declining and production profile is declining, and they're going to need to backfill that because they've done a good job over the last 10 years worrying about cost control and asset quality to the detriment of the future pipeline.
Yeah, it's an interesting point. Do you think the M&A is just going to kick off now, given they don't have that pipeline after the cost discipline of 10 years?
I think
have
necessary.
they not got the license to do that yet? The sharedholders still holding
I think that's the dilemma. Is I think there's a class of investors that are looking for gold companies with leverage, or as a gold play, and they don't like M&A. But I think at some point the companies are going to have to make a decision how they're going to look at that, and they're going to decide that they need to acquire these companies that are on the lower end of the spectrum.
Matt, you mentioned Barrick, and I just came to mind that there was an announcement about them moving into Pakistan with the Reko Diq copper asset, which hasn't been active for quite a long time. That's quite an interesting strategic move from them. Is that sort of illustrating this sort of need to prove a bit more relevance from the majors, or to move into new metals or other areas?
I'll just say quickly, I think that's more Bristow, going back towards Barrick's portfolio, seeing these assets that have been mishandled by management in previous cycles, and seeing if he can do a firm reset. Barrick's had exposure to that asset for some time, so I don't think that directly falls into it. But that's a smart way for Barrick to attempt to grow organically without having to go out and do new M&A.
Let's take us through your assessment on the state of the miners at the moment.
we're focused in our portfolio is in the exploration space, because that is, and it starts with the macro view. We believe gold and silver prices are going much higher. How do we get the most leverage to that? For us, it's acquiring a diversified portfolio of exploration opportunities. We have 75 companies in our portfolio. Average market cap, the market caps range from 5 million to $1.5 billion. We have, but the opportunity is really on that left-hand side of the Lassonde curve, because that's where the wealth is created in this industry. You can buy gold in the ground for literally 1 and 2 pennies on the dollar, and when you have a discovery, that on average, the historical data shows that on average, for discovery, the stock will appreciate to about 20% of the ultimate value of the gold in the ground during that excitement phase around the discovery. And a lot of people may have seen the stylized Lassonde curve, which shows that stocks go up during the exploration discovery phase. They trend down and they sag in the middle during the development phase, and then when they go into production, the stock prices go up again. So we're focused on that wealth creation side on the left-hand side, because that's where the big opportunity is today. The majors have underinvested for the last 10 years on developing new mines, on investing in exploration, and they've left it to the juniors, and the juniors have been underfunded. So we're at Crescat, we're getting the capital to the companies to through PIPE investments, where we can acquire stock at a discount, we can get warrants, get them the money to do the drilling, to do the exploration. We have an expert geologist who's a partner at the firm helping us pick the stocks. Quentin Henney, he's 30 years of experience, been responsible for many major discoveries himself, and so we're able to get the companies, get the money to the companies that deserve, that have the best projects, that have the best technical teams, to make the discoveries. The M&A cycle hasn't even hardly begun. Yeah, there's Great Bear, there's Newcrest and Pretium, but I think the majors have been smart not to invest. I mean, gold prices need to go up a lot more before you're going to see them really deploy capital into the space. That needs to happen first, and then you're going to see it. The juniors are going to. There's just incredible value today and appreciation potential on this in the junior space.
What's that incentive gold price? Where does it need to be before it's going to trigger this? Are we talking?
Well, the problem is you have rising energy prices now too, right? And so the cost of producing gold is going up, and rising labor, and it's hard to find people to there's been a 10-year declining enrollment in geology. We can't even find quality technical people to run some of these projects. It's the costs are going up, and before in 2011, the institutions, got fed up with how the industry was spending like drunken sailors, and they stopped investing money in the space. And so, how far does it have to go up? I don't know, but I think there is a cycle coming, and there's a lot of optionality for the majors in terms of what to do. And people may say, "Oh, Barrick's never going to get it." Bristow says, "Oh, we're not looking at acquisition," but they will change their minds. They will start putting money to work when the demand is there, and it's coming. Yep.
Miranda, take us through your approach, because you're financing more and more companies now. OSIM are doing a lot more in the precious metal space. And,
Yes.
How do you see the value in the sector?
So this is interesting because OSIM's a relatively new kid on the block. We've only been around for a couple of years. We have it's sort of a two-pronged approach. We look at development near production and producing small-scale producing assets where we can deploy small blocks of capital. And really, our core business is a metals trading business, right? So we want to be able to access the production. we have a small equity fund that we are, and I come from the space of like early stage investing or juniors where the wealth creation can happen. You start at the beginning, exploration, discovery, and when I looked at that, I was amazed at how much value you could build early on. And I think we're trying to get our team to advance the equity piece so we can have kind of a dual approach where we can put money into the more advanced projects, but there's also huge merit in taking small pieces of equity in those projects, but also looking at the early stage opportunities. And we are, gold, silver, platinum, palladium, and now copper. So we're trying to. I'd like to see that equity piece advance a little more from our perspective, and I think we certainly have a lot of work to do to figure out what's in the legacy fund. So what are the legacy holdings? And how can we take some of those funds and really create some value in the companies, but value for ourselves.
Brian, where's the value in the sector in terms of your output?
I think the value in the sector is in the juniors. If there's a theme to this event that I've seen so far, it's that the majors are making money hand over fist and generally doing okay because they're in the big indices and even the generalists are moving in there. But the junior market is moribund. There's been no real movement and no excitement, and even the financing windows are kind of difficult to open or look more difficult to open. I think that's going to change because one of the things I've seen or noticed over my long career is that you need an underlying bull market in gold and silver to get interest in the juniors. Nobody gets excited about a zinc bull market. Let's face it, that doesn't really get everybody energized. But if there's a gold bull market, a silver bull market, people get excited. It brings people kind of on the periphery into the market. And then they go in, they buy the undervalued gold and silver juniors, and they get interested in copper. They say, well, that's an interesting zinc play. Then they look into it. Then you get rare earths, then you get uranium mania, then you get all that other stuff. But you need gold and silver to bring them in. And I think we're going to have that now. I think that's going to happen. So I think we've got, the macro picture, the general picture in our favor right now.
Yep. Okay. Well, let's zoom out and think about generalist capital coming back into the sector then. And gold has historically been that hook, and it's moved first, and then everyone starts to look at other metals. Can we work down the panel again and talk about, are people ringing your phone more now, Matt, to sort of get into the fund now that they see these metals prices generally? Is it gold that's really attracting them back in? Or is there still a real problem here with ESG and elements like that slowing down new capital flows to the sector?
Well, the Ukraine-Russia conflict's obviously very much in the headlines, and so there has been an increase in interest. Folks are thinking about mining in some cases for the first time in 15 odd years. So I'm seeing that in terms of inbound queries and interest in the fund. In terms of attracting generalists to the space, this might be a bit of a contrary take here, but I think it will be through dividends potentially. I would argue over the past 15 years, we've seen investors chase growth and chase narrative. I don't think there's really much debate about that. I do feel the pendulum will swing back to value here. And for the first time in my lifetime, gold stocks are cheaper than the general market. And from a dividend perspective, it's hitting higher yields. So I think over the coming years, we will see investors start to chase yields. It's hard to see asset prices rising at the rates that we've seen over the past 15 years. And so I think that could be to the benefit of the gold miners that are disciplined, don't go out and splurge on M&A, cut costs. Of course, there can be some growth, but I think it's preferable doing that organically and distributing money to shareholders.
Just playing devil's advocate, is the dividend strategy, though, of some of the majors harming that organic growth? If you can't reinvest it into the sector and bring new supply online, it's going to harm things in the long run, despite keeping shareholders satisfied this year and next year.
Yeah, no, it's a fair point. It's a fine balance, right? If you're trying to remain the largest or one of the largest gold producers in the world, you're going to be forced to do M&A. But I don't think you necessarily have to grow. It's hard for a CEO to here. We have a few world-class assets with 10 plus years of mine life for each. Why don't you just let them run and distribute the cash to shareholders? Something comes along on the cheap, you can scoop it up, especially if there's synergies nearby to existing operations, then you can go ahead and do that. But there's a certain obsession with growth and empire building in this industry, and I think that should be pointed out.
Peter, sorry, come back to the generalist point first, and then.
Yeah, no. So I mean, I think when in 2020 we saw a sustained rally of the gold price, and I think that flowed through to the juniors, and I think that's the type of market we need. I mean, Ukraine's great for the gold price, not for what's going on there. But when you see the volatility around the gold price, the junior companies don't participate. And so I think you need to see a sustained rally in the gold price to get to generalists, as kind of everybody said, is that then that flows back into the juniors. I think one other point just about the juniors is, assets obviously the most important part. I don't, you can't have a good asset or a bad asset, and it's hard for people. You can talk about ounces in the ground, but if it's not good ounces, it's hard to rationalize an investment. The other important part is the team. You need to have good teams that are capable of managing the capital markets, capable of managing the environmental and social aspects of. So I think that's the kind of helps support any investment you make during the periods of, not doldrums, but, stagnated sort of market. But then that you can get confidence that those teams are capable of having discussions with the larger companies in their ability to invest in some of those models. So I just think we need to see a sustained gold price, not predicated on shock events. And then and I think we're going to get that. It's just we haven't had it yet.
Okay, excellent. By the way, if anyone wants to ask a question, please put a hand up and we'll chime in. Okay, yep.
Thank you. So this whole, how Bitcoin is up and everybody's the younger folks are thinking about Bitcoin. It's really a generational thing where all of us that are beyond 35 years of age are thinking it. I don't own it. I don't know that I ever will, but I'm just curious how you feel like that's affecting how, if it's holding back gold. And then to follow up, how do we unlink from the energy space so that we don't get, as they used to in the past, tobacco kind of haunted that space, and now I think that the miners somehow or another need to unlink from the energy space so that the whole green revolution doesn't hold us back.
Yeah, fair points on the ESG there, and also the crypto element. If anyone wants to take that.
I mean, I live in Silicon Valley, but I'm a mining guy, so that's a sort of contradiction there. But I don't believe that the crypto investor is similar to the gold investor. I think the crypto investor is somebody that is embracing technology and looking for alternatives to stay off the grid. I think the gold investor is someone who has fundamental belief in the economy and how it is working, and that's how they're going to invest. So I think there is some kind of interplay between the two, but at the end of the day, I think they're separate type of investors. I think you saw that when we've had the recent rally in gold and crypto was falling at that same time. So I'm not. It's here to stay. I think there is something about it, and I think I agree with you. Like it's kind of over my head, but it's something that we're at the early stages, and they're going to figure out ways to utilize it. But I don't believe that's going to be the effect that we're going to have with gold.
I just wanted to add, so I'm based in Toronto, and we've seen this huge ebb and flow of capital. Sort of when cannabis, became legal in Canada, this huge inflow of money into the cannabis space. Valuations went through the roof, and it seemed to be sucked out of the mining sector, and everybody went, "Oh, this is great! We're going to make all this money," and then the wave crested, and then it dropped off a cliff. And everybody then went into crypto, started looking at that. I think there's a real opportunity in the mining space now. I think we really we have to tell our story. We have to tell our stories well. We have to focus on our successes, because all people, you guys work in mining and that's a dirty business, and you guys live big holes in the ground. And we need to talk about what we do and our commitment to the people and the communities and the environment in order to be able to talk about the successes in the business. And then I think people will start to re-engage. But I also agree we need a sustained gold price to be able to do that. But there's so many moving parts to an operation. We just need to be able to talk about it and say, look, we are actually stewards of the planet. We're not destroying environments. Yes, there are always bad actors in any space, but we really need to focus on the positive, and what we actually do as an industry for communities, environment, building projects. I think we need to do a better job at that.
I would say that crypto has definitely stolen some of the speculative demand from gold and juniors. And that's what it is, a speculative asset. I don't think it's really robbed gold of much of its portfolio allocation, store of wealth demand, the kind of thing that raises your, not necessarily your return on a portfolio, but your risk adjusted return on a portfolio. So I think there's big money allocations being made toward gold on that basis. And I think crypto has been proven over the last 6 months that it is not an inflation hedge, that it is not a crisis hedge, and it's not a store of value, and that it is simply a speculation right now. Who knows what it's going to be? The one thing you can really bet on is anyone who's absolutely certain what it's going to be is just trying to get you to buy more crypto to support their allocation. So nobody really knows what it's going to be, but it is a setup where everybody who holds it has to get more people to buy it. Other than that's the only way it's going to rise in value, rise in price value.
Interesting. Okay. Are there any more questions, please? Someone? Yeah, there's one on the back.
Test. There you go. So I have a couple questions. One is, we were talking about a currency crisis coming up potentially. It's a big deal. So a couple questions related to that. What do you think about cross-borders risk for these different mining companies? There's a lot of Canadian companies that they mine in various countries, and if there is a Western currency crisis in this time, how is that going to affect the contracts or even the continued operations of these places? And then also in the near term, just a couple days ago, with just the 25 BIP increase on the interest rates, the 210 yield curve started to invert. And I was wondering, as capital allocators, if you're interested in or if you're looking for the capital markets to turn into these gold silver investments, or if you're more cash heavy right now and you're waiting for this maybe like recession flight from these companies before you buy up assets.
Anyone want to jump in on that one? Currency crisis first, quickly.
No, I'll touch on that. So, you talk about a potential Western currency crisis. I'm actually on the opposite side of that. I mean, I think if anything, and I agree with Brian on this one, that the dollar is probably the foremost fiat currency and likely to remain so. Much more profits with investing in rubles, Chinese yuan. I believe we're short the yuan. Jurisdiction-wise, I do believe that you need a diversified portfolio. We want to be in the best mining jurisdictions, we like Canada, we like the U.S., we like Australia, certain places in South America, Brazil, in particular, Peru is okay, but we like Bolivia. Bolivia is a high tax regime, but it's a mining friendly country. So I think that's important when it comes to this idea of yield curve inversion and recession upcoming. I believe we are coming into a recession, but I believe this recession is going to be a lot like 01, 02, a lot like 73, 74, where you see rising commodity prices, rising inflation at the same time as you have large cap growth stocks, technology stocks. I think crypto is like the tech bubble on steroids. I mean, this is you can have investment cycles where commodities and inflation rise at the same time as stock prices go down, and you have inflationary recessions and stagflation. Look at the 1970s. This is the type of period that we're going into now.
Matt, you look like you wanted to chime in on that?
Sure. Well, I was just going to say on the jurisdictional risk front, we
Please.
touch on that. I think it comes down to investor preference ultimately, and what you're searching for. If you want to play the optionality game and bet on pounds in the ground, then there's plenty of projects for you in Western, safe jurisdictions with rule of law. If you're out there looking for world-class projects, very high margin, you do have to go to some of these more sketchy countries, so to speak, that have been less picked over. From my perspective, it's about balancing risk, not putting all your eggs in one basket. But as far as MJG goes, we have exposure to countries such as Ecuador, Bosnia, Ivory Coast, Mali. But try not to get overweight in any of those countries. And if you're making that choice as an investor, you also have to take the time to have your finger on the pulse of the political wins in the countries that you're invested in, and that can be time consuming. There's nothing wrong with confining your opportunity set to first world jurisdictions. You're just potentially sacrificing and missing out on world-class projects that are located offshore.
Okay, we've got 1 minute left. Just to summarize on your last question, condense it a little bit. Dry powder for this year. How many are we making? Loads of investments, or are we waiting? Is this a great time for your fund? Let's just work down.
I'm making investments. I'm more active than I have been over the last couple of years. And just a quick comment on, I believe you'd mentioned what gold price makes things change. And I don't think it's really dependent on the gold price. It's not where the gold price is, it's where it's headed. And if there's a sustained uptrend, then you get that kind of excitement in the market. And frankly, I think we're headed into that kind of an environment.
We're super busy. We've got a lot of opportunities ahead of us. We are trying to manage our country, our country risk, and diversify. We've been quite focused in North and South America, so we're trying to broaden that now. But we've got a lot of opportunities in precious metals and now into copper.
We haven't really got time. Grab these guys after. I'm sorry. It's just we've got slots that we have to be careful with. But very quickly, gentlemen, Peter making a lot more this year.
I run a closed-end fund, so I run fully invested. Really, what it comes down to is portfolio reallocation. So if I find better options, I will shift out of certain names. But,
Shuffling the deck.
Yeah.
Excellent. Okay.
We've been quite busy this year. For context, we only made 4 new additions to the portfolio in all of 2021, and have already added 3 new names to the portfolio so far this year, 2 via private placements and one's a post-discovery play that we bought on the open market. So imagine I'll tap the brakes a little bit, maybe we have room for one more name of the portfolio by mid-year.
Excellent. Fantastic. Well, there you have it. Round of applause, please, for our precious metals panel.